Hey guys, and how are we all doing? My name is Trader Miju from Tradable Financial Services, and I'm going to be taking you on a very simple, basic lecture where we'll be just treating on ICT's concepts of market structures in just 5 minutes. And before you continue, I want you to hit that like button, subscribe, and share so you get updates when next we post amazing content. So straight up to what we have today, and as I said, if I'm going to take in your ICT's concept of market structures in just 5 minutes, and risk warning still remains the same, that forex and other related products carry some high degree of risk, and you must be careful when trading at all times. Okay, so ICT just has three main types of market structures, and the first one is the uptrend, which I would refer as the bullish market structure. Okay, and it's just as the name says, uptrend, so it's something that goes up, so it's just uptrend. Okay, very simple like that. The second one is the downtrend, which is a trend that goes down. Okay, and it's also referred to as the bearish market structure. The third one is ranging, and when something is in range, it's like it's just moving up and down, up and down, up and down, and that's just how this market goes. Okay, so I'm going to show you right now live chart examples of this market structure so you get more understanding of them. So a recap of them: we have the uptrend, which is bullish, we have the downtrend, which is the bearish, and we have the ranging, which are also called the sideways market structure. So our chart right now, and this is an example of the uptrend. I've marked it out to make it easy for you to understand. So uptrends are characterized by two major things: we have the higher highs and the higher lows. Okay, so for the uptrend, we have these higher lows all down here and higher highs all up here, and what it tends to move is that the trend moves up and it creates a low, then it moves up again, which will be higher than the previous high, which would be called the higher high, and it comes low but not so as low as the previous low, and this is called the higher low. So we have this going up down like a higher low, higher low, and that is what an uptrend is just characterized by. And I have it playing out here just in front of me on the live chat, and this is the DXY index, which is the dollar index, and we just see a series of high and higher low, high and higher low, higher highs and higher lows. So I can just even mark them out so we see them together. We have this comes down, we have this, it comes down, we have this, which is high, we have a higher low, we have an high, we have a next higher low, and we have a higher. So this is just an uptrend that just played out in front of us. Okay, so it's very easy and simple like that. Uptrend characterized by higher highs and higher lows, and this is what ICT refers as uptrend or bearish market structure. So the next one I'll be looking at is what I call the downtrend or the bearish market structure. So the previous one is the uptrend or the bullish, so this is the downtrend or the bearish, and this is just made by subsequent lower highs and lower lows. Lower high, we have a lower low, we have a lower high, we have a lower low. Okay, so its concept is that it goes down, okay, then it makes a low and it comes up, which will be the lower high, then it makes a lower low, which will be lower than the previous low, then it comes up but it will not be as high as the previous high, then it comes lower again before going high, and just subsequently like that. And we have it playing up right here in front of us. So I'm just going to highlight like I did the lower. So we have the lower low, we have the lower high, we have the lower low. Okay, it's actually lower than this other one. Yeah, I can see it's lower than the other one. So we have a lower high, we have a lower low, again we have a lower high, and it just continues all the way down, which is what we call the downtrend market structure. Okay, so I'm going to jumping into the last one, which I call the range or the sideways market structure. So this is quite very simple, and it's just a point where market doesn't really have a clear direction, just moving just sideways or the rectangular structure. And most of the times you can highlight these market structures with just a single rectangle up and a single rectangle down. Okay, So this is a ranging structure, and these are all the highs and the lows. So we have these marked out just right in front of me. This is a ranging market structure, which I'll highlight with my, okay, so this, the high, the low, the high, the low, the high, the low. So no really clear direction. Okay, so I hope you really understand all these three market structures, and look out more for amazing content coming your way. Remember to hit the like button and subscribe. See you again next week. My name is Trader Meju from Trade with Bolu Financial Services. Bye for now.